What is retirement planning? Retirement planning is the process of determining retirement income goals and the actions and decisions necessary to achieve those goals. It includes identifying sources of income, sizing up expenses, implementing a savings program, and managing assets and risks. You have to know an important retirement note for success. First, do not underestimate your retirement expenses. You will need to estimate your current expenses and your future retirement expenses, such as Malaysia travel or your medical bills or your pending housing loans. You should at least estimate 18% of your current expenses as your retirement expenses. Second, prepare your umbrella. There will be two things you need to prepare. One will be your emergency savings, another will be your medical insurance. These are two protections that you will need during your retirement years. Third, adjust your portfolio. With today's life expectancy, you are expected to live longer for at least 20 or even more years. So during your retirement years, you still need to ensure that you still have some high-risk investments in your portfolio so that you can make sure that your fund lasts longer. In conclusion, we target the community of working adults, these who are preparing to retire in a few years' time and those who want yearly planning of retirement.
Hi, I am Sampui Ling. Next, I will share 3 sources of retirement funds. First, Employees Provident Fund (EPF). It is an approved fund and also a compulsory retirement scheme in Malaysia. Under the scheme, an employee has to pay a certain contribution toward the scheme, and an equal contribution is paid by the employer. The EPF is intended to help employees from the private sector save a fraction of their salary in a lifetime banking scheme to be used primarily as a retirement fund and in the event that the employee is unable to work. There is a frequent questions about EPF. People always wonder if their EPF is enough for retirement. The result is about 80% of the workforce will not have enough money at retirement to sustain themselves. Better safety is to fund in other retirement schemes too. However, here's a small tip for building more money in your EPF account, which is through voluntary contributions, also known as voluntary provident funds (VPF). The employees are able to contribute up to a maximum of 60,000 per year. This VPF also earns a tax-free interest. And for information, the latest announcement for EPF dividends is 5.2% for conventional savings and 4.9% for Shara accounts for 2020.
Hi, my name is Hafiza. Second sources of retirement fund is personal saving and investment. How to make it? First, saving from young. Earlier we save, more we get. Second, make your own saving like saving 1/4 your monthly income. And third, saving your money at Tabung Haji or ASB. We saving and invest the money at the same time. 4. Invest in bond, a major investment when we want to retire. This is because bond is fixed interest and are not affected by day-to-day volatility. And lastly, buy property like house and rent it. Profit from the investment we can get for long term. Why it is important? As we know, all of this plan can secure our finance, which keep safe and afloat since we are no longer be employed. Money from saving we can use for emergency fund like paying medical bill, and also will improve our standard life. Maybe we want to buy a better car. And while for investment, it will give highest dividend rate like ASB provide 3.75% of dividend, and it have strong potential to grow faster in specific period time.
Hi, my name is Afiman. The third sources of retirement fund is the private retirement scheme, which is known as PRS. PRS is a voluntary long-term savings and investment scheme designed to help you save more for your retirement. It offers a choice of retirement funds, and individuals may choose to invest based on their own retirement needs, goals, and risk appetite. The fund options under PRS are intended to enhance long-term returns for members within a regulated framework. Why PRS? There are 6 reasons why it is a right choice for you to contribute in PRS. PRS is a regulated framework by Securities Commission Malaysia. PRS is known as central administration to protect your interests. PRS has tax incentive and affordable savings. PRS is also easy for investment for everyone. And lastly, PRS is purposely designed for retirement. There are a few lists of PRS provided in Malaysia. The first will be Affin Hwang Asset Management Berhad. Second, RHB Asset Management Sendirian Berhad. Third, Public Mutual Berhad. Fourth, AN Fund Management Berhad. Fifth, AIA Pension and Asset Management Sendirian Berhad, and lastly, Kenanga Investment Berhad.